Look how every time the 50-period moving average has crossed above the 200-period moving average, Bitcoin's price has immediately revalued in a very aggressive way. It's already happened 3 times, and now this new crossover seems to be forecasting a continued bullish trend for Bitcoin. And we're talking about the weekly chart here. However, if we look at Bitcoin's fear and greed index, we can see that we are currently at a high level, but we're definitely not at extreme levels. So can Bitcoin keep going up? Let's take a look. On the screen, you're seeing Bitcoin's weekly chart shared by a crypto trader on Twitter. And what does it show us? First, the orange line represents Bitcoin's price on the weekly chart. The white line is a simple 50-period moving average, and the yellow line is a simple 200-period moving average. So what is this trader trying to identify by analyzing these crossovers? Well, this type of technical analysis based on indicators has been around for a long time. And in the case of moving averages, there are many different ways they can provide useful information for making trading decisions. But one of the most common approaches is comparing a fast moving average with a slow moving average. The idea is to understand when the fast moving average, in this case the white line, crosses the slow moving average. What this tells us is that when comparing the last 50 periods, which naturally react much more sharply, with the slower moving average, which is the yellow line, smoothed out because it accounts for 200 periods, the crossover can give us clues about market momentum. If the fast average crosses to the upside, it suggests buying pressure is stronger compared to the broader, slower trend. If it crosses to the downside, it would mean selling pressure is starting to dominate compared to the average of the last 200 periods. Translated into simple words, every time the white line crosses above the yellow line, it means buyers are taking control. However, I have to say this, these types of indicators are highly lagging because they rely on past data. The 200-period moving average, for example, needs to calculate the previous 200 weeks in order to plot its current level. That means both the 200-period and the 50-period moving averages are extremely delayed indicators. So what am I trying to tell you with this? On one hand, and first of all, let me tell you this, just because it worked once, twice, and 3 times, that doesn't mean it's going to work a 4th time. There are no guarantees here, because a statistical sample of just 3 instances is not representative, and it's not something we can seriously work with. Taking this data too seriously wouldn't be professional at all. It would be, frankly, extremely amateurish. And going back to the fact that technical indicators are very delayed, look at where the crossover actually happened. Basically, as they say, just last week. But in reality, since early 2024, Bitcoin has already been trending upwards. Look at how much it had to rise before this indicator finally alerted you. Of course, you need to understand that these technical indicators need to gather all that data first before they can realize Bitcoin is going up. And by the time they have enough information, that's when you get the alert. That's the danger of relying on this kind of indicator. Now, I just explained how technical indicators work in relation to moving averages, but keep in mind that RSI or MACD, those stochastic oscillators you often see at the bottom of charts with green and red little mountains, suffer from the exact same issue. They are lagging indicators. So I don't recommend relying on technical indicators if you want to perform a professional technical analysis, especially when we're talking about discretionary technical analysis. Now, let's look at the fear and greed index. We see Bitcoin currently sitting at a value of 67. In previous years, for example, in 2024, the fear and greed index reached 92, and on November 23rd, it hit 87. What does this tell us? It tells us we're not in a state of extreme greed. However, it's undeniable that we are in a moment of great enthusiasm from Bitcoin investors. So does this mean that just because we're at a high level, the price should necessarily crash or keep rising? Honestly, the fear and greed index, the way I would use it personally, and I say would because I actually don't use it in my trading, but if I had to, my approach would be completely opposite to how the majority of people use it. The average retail investor sees a high greed index in a rising market and thinks, this is good, I need to buy. And when the fear and greed index is low and the market is falling, that same retail investor thinks it's time to sell. As I said, in my case, I would use it the complete opposite way. I can tell you with absolute certainty that going against the crowd is a strategy that will take you much further. Just Just look at the moments of extreme greed. Bitcoin's price had been going up, and then it got, let's call it a reality check. Look how its price couldn't climb any further. In fact, it eventually dropped. Here again, the price reached extreme greed. Bitcoin had been rising cheerfully, and that was exactly the point where it could no longer continue, and then it dropped. And if we talk about extreme fear, look at the 2 points of extreme fear. Bitcoin had been falling, extreme fear kicked in here, then it returned again. And what did the price do? It definitely didn't fall further. It kept going up. And that's what I'm telling you. This type of indicator should be used completely the opposite way from how the average retail investor uses it. Now, we also have the so-called golden cross, which I already explained you should absolutely ignore because any expected result would just be a coincidence. And at the same time, I'm telling you that when we do see extreme greed, that's precisely when we should be selling. All of this might make it sound like we are bearish on Bitcoin and crypto, but that couldn't be further from the truth. And soon you'll understand why. Well, let me tell you this. If you ask me, the fear and greed index hasn't yet reached extreme greed. What does this mean? It means Bitcoin's price can still keep going up and the greed index can still rise to extreme levels. What would that imply? Well, we could eventually use this indicator as a contrarian bearish signal, but right now I wouldn't use it that way because it makes sense for Bitcoin's price to continue climbing. And if you were paying attention earlier, I also said that any resemblance between this golden cross and reality would be pure coincidence. That doesn't mean it can't happen. It just means that if it does, we're not going to associate it with such a poor kind of analysis. But I think you're starting to get my point. And now I'm going to explain what we think Bitcoin and the rest of the crypto market might do next from a professional perspective. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
As you already know, in the medium and long term, we've been very bullish on Bitcoin and crypto. And now it seems people are finally starting to wake up. Just look at the massive breakouts we've had in different crypto assets we've been following. Ethereum, XRP. We're seeing Solana breaking a very important crick. Look at what BNB is doing. It's beautiful, incredible, a real Black Swan event. And not to mention the Black Swan and Link. As you know, we've been looking for all these breakouts, including SLM to the upside, as well as this huge move in SU. But here's the thing. Even though we're bullish for the medium and long term, and even though we've already given great entry points in Bitcoin and across a crypto ecosystem for that long-term vision, that doesn't mean the market won't fluctuate in the short term, day by day. It constantly offers both long and short opportunities. There are even scenarios where we are bullish in the medium and long term, but for intraday trading, we're bearish and looking for short trades. This is just everyday life at Crypto Insight. Look how using SWI as a reference, even though we are bullish for the medium and long term, what we were actually waiting for was an up thrust, a bullish trap, to then go and look for that one-to-one target, referring to this whole distribution process. The idea was for the price to bounce where we could look for a long entry, and then we'd expect its price to eventually climb. Now, whether we see the trap or even the one-to-one move depends entirely on market timing, but what I'm sure about is that it has to be a trap. At the very least, we need to look for a long in SUI from a trap. They could also try to hit that one-to-one target first, then leave, and that's also something they might do. But we'll need to watch carefully, just like I always say, using cross analysis to see where each asset is at any given moment. That's what we need to do. Going straight for the target is obviously complicated. We're missing some information and it's not ideal, but honestly, I don't think it's going to be a very long move. Something like this makes more sense to me. Maybe, for example, they create a climactic action here, an up thrust, give us a Black Swan, a test, and then look for the this harmonic pattern. And if they don't want to set the trap, they could just aim straight for the target and then move the price afterward. What you just saw was a flashback from July 17th from a Crypto Insight Premium live session. As you can see, we were expecting this kind of drop. And let me tell you, the very next day on July 18th, we went for an aggressive scalping setup on 5-minute timeframes across the entire crypto ecosystem. Even though we are long-term bullish and always looking for buying opportunities, that day we also wanted to take advantage of short-term bearish movements through scalping. Because don't lose sight of this, while long-term outlook for crypto is extremely bullish, when it comes to the next next futures trade, the next trading opportunity, we evaluate the short side as well. And on July 18th, that's exactly what we did. For Solana, we probably need to see some kind of trap, quite likely. Look at BNB, it's at a key level, definitely a key level. The entire ecosystem is at an interesting point for short trades right now. Ethereum is already reacting here, and for me, it's clear. They've gone to test this level and it's reacting. Bitcoin is pretty much the same. It's also at a good point. We work these trades with very tight stop losses. We look for opportunities at market extremes, and understanding what and when a market extreme happens allows us to know if the idea doesn't work out, we don't need the price to go far against us to realize it. We'll know almost immediately. That's why we can work with such tight stop losses, which in turn gives us very small loss ratios and very large profit ratios. That's exactly what we aim for. And for those who are new, great emphasis here. Always work with tight stop losses. And as I said, the direction is short. Maybe they won't even bother with traps and just head straight down. That could absolutely happen. It's perfectly possible. So for me, the directional bias is already well defined. Shorts. As we've been analyzing, neither Bitcoin nor the crypto ecosystem shows any clear signs of bullish exhaustion for now. If anything, we can say that Bitcoin and cryptocurrencies still have room to grow in the medium and long term. But I'm also going to share with you the big buts, or better said, what exactly you need to watch for on your charts to consider that the bullish momentum might have come to an end. Let's start with Ethereum. After that Black Swan event on its daily time frame, look at the massive bullish breakout. We can see that there's still some room left to reach the upper part of this macro range. So in simple words, naturally, there's still space to move higher. And I'm not saying crypto will only go up this little and stop. Far from it. What I'm saying is it would be strange if it didn't at least reach that point. Could it go much higher? Of course it could, but we're simply valuing how easy it would be for Ethereum to reach $4,000. And then look at Ethereum again. This breakout is key. It's a spectacular black swan that we've been anticipating at Crypto Insight for a long time. Remember how that wick caught our attention and the following candles filled it, which suggested immediate continuation? That continuation could even push past all-time highs. And yes, some people might already be thinking, careful, this could be a trap. I won't deny I'm watching that possibility out of the corner of my eye, but I don't think it's wise to raise alarms about that right now. What I want for the Crypto Insight audience is to keep things simple when explaining extremely complex scenarios. So for now, my message is clear. Today, we have no confirmation that the assets are going to fall. If tomorrow we see certain behaviors, which I already have in mind, but I won't bore you with now, I'll show you and keep you informed. For the moment, let's stay positive. Look at Solana. It has broken through this advanced trend line that promised to hit and break this macro creep. The members of the course know this well, and now we have a very aggressive breakout. This by itself is positive. Does it also raise the alert of a possible trap? Sure, but are we prioritizing that alert? No, not for now. It's not the time. Look at BNB. On its daily chart, it gave us a black swan and hasn't stopped climbing like an absolute maniac. It's already very close to its all-time high. That's why I said earlier, with Ethereum, how easy it would be to push a little higher. It would feel strange if Bitcoin and crypto this week, or maybe next, at some point within these 2 weeks, either quickly or by the end of the second week, didn't try to reach $780 for BNB. Whether that's to set a trap or to keep pushing higher, we'll see. But to keep it simple, we remain optimistic. Look at Link. It broke an advanced trend line that promised a search and break of its macro creep, and that's exactly what it did, breaking it with great strength. That's extremely positive. Look at Stellar, XLM. It shot up like an absolute maniac too. We expected that breakout, but honestly, we didn't expect such a massive rally. Still, that's what happened, and now we see XLM hitting a key defense zone. It's normal to see the price reacting here the way it is. Does that mean with absolute certainty the price must crash from here? Clearly not. It simply helps us understand why the price can't break through this level easily or quickly. All those heavily short positions are defending strongly. They're not going to give up easily. That doesn't guarantee the shorts will win, but they are making life very difficult for the bulls. Now, imagine what a great signal it would be if the price managed to break through this zone. It would be spectacular for bullish continuation. That's why for now, we're staying positive for the medium and long term. What I mean is that there might be some noise here, sure, but the overall picture remains optimistic. If the situation changes, of course, I'll let you know. And here with SHIB, we can see it's knocking on the door of a very important macro creek. A strong breakout above it could promise an aggressive bullish continuation for the asset. Obviously, none of this is guaranteed, far from it, but what we can see and analyze, continuing with the same analysis we've been sharing over the past months, is that at first glance, and even more so considering what the price has done, exactly as we predicted beforehand, after this drop to the target and subsequent reversal, if it breaks aggressively to the upside, it will give us every reason to stay very positive. It will also be crucial to watch MicroStrategy. Even though it made a trap right on an extremely key defense zone, if we analyze it on the M15 timeframe, we can see how it's been losing steam after that massive, powerful impulse. Look at that majestic, dominant move, gradually losing momentum, losing steam, and you can clearly see how price is getting cornered in what looks like a structural trap scenario. Sure, this black swan event created what it created, and yes, that looks ugly by itself, but it could simply be a circumstantial event, and that circumstantial event might be confirmed as such if on the 4-hour time frame, MicroStrategy is just making a test back to the origin of the breakout. If it wants to shake things up a bit more, why not? But even considering all of this, we could still see a bullish MicroStrategy. And remember, MicroStrategy is a great proxy for understanding what Bitcoin and the entire crypto ecosystem are doing. So what I'm telling you is that we have no confirmation at all suggesting the crypto market is about to fall. And from experience, the prudent thing to do is to keep supporting this bullish direction, which has given us great opportunities to ride the trend with long positions. Until we see something alarming, we'll keep backing the bullish market direction. And if you found this advanced technical analysis interesting, let me know in the comments. Tell me, what's your opinion about the markets? Are you bullish or bearish? Also, give the video a like, subscribe to the channel, and click the bell so YouTube notifies you of future uploads. Good luck with your trading, and see you next time.